Here are 5 top secret things that hedge funds and Wall Street are hiding from the common investor. Frontrunning. Frontrunning is when a broker or trader uses their knowledge of upcoming client orders to place their own trades ahead of time, giving them an unfair advantage. This is a common practice on Wall Street, but it is illegal. Payment for order flow. Payment for order flow is when a broker receives a payment from a market maker in exchange for directing their client's orders to that market maker. This can create a conflict of interest, as the broker may not be choosing the best market maker for their clients. High-frequency trading. High-frequency trading, HFT, is when computers are used to place and cancel orders at lightning speed. HFT traders can often make small profits on each trade, which can add up to big profits over time. However, HFT can also be very risky, and it can make markets more volatile. Dark pools. Dark pools are private exchanges where trades are executed without being visible on public exchanges. This allows institutional investors to trade large blocks of shares without moving the market price. However, it can also make it more difficult for retail investors to get the best price for their trades. Naked shorting. Naked shorting is when a trader sells a security that they do not own and borrow it later to deliver to the buyer. This is a risky practice, as the trader could be forced to buy the security at a higher price if the price goes up. Naked shorting is also illegal in many countries. These are just a few of the many things that hedge funds and Wall Street are hiding from the common investor. It is important to be aware of these practices so that you can make informed investment decisions. Please note that this is not a financial advice. Do you know that most hedge fund, the so-called smart money, always underperform the S&P 500 ETF? There are a number of reasons why most hedge funds underperform the S&P 500 ETF. Some of the most common reasons include high fees. Hedge funds typically charge high fees, which can eat into returns. These fees can include management fees, performance fees, and trading costs. Complex strategies. Hedge funds often use complex strategies, which can be difficult to understand and implement. These strategies can also be risky, and they may not always produce the desired results. Limited capacity. Hedge funds often have limited capacity, meaning that they can only manage a certain amount of money. This can limit their ability to invest in certain assets or to scale their operations. Human error. Hedge fund managers are human, and they make mistakes. These mistakes can lead to losses for investors. In addition to these factors, the S&P 500 is a very broad index that includes a wide variety of stocks. This diversification helps to reduce risk and improve returns. Hedge funds, on the other hand, often focus on a smaller number of stocks or sectors. This concentration of risk can lead to underperformance if the stocks or sectors that they invest in do not perform well. It is important to note that not all hedge funds underperform the S&P 500 ETF. There are some hedge funds that have consistently outperformed the market over the long term. However, these funds are rare, and it is difficult for investors to identify them in advance. For most investors, it is a better strategy to invest in a low-cost index fund such as the S&P 500 ETF. Index funds provide broad diversification and low fees, which can lead to better returns over the long term. Let me give you an example. Remember Cathie Wood, ARK Invest? ARK Invest is an investment management firm founded in 2014 by Cathie Wood. The firm specializes in investing in disruptive technologies, such as artificial intelligence, robotics, and blockchain technology. ARK Invest has become one of the most popular investment firms in recent years, thanks to its impressive track record of returns. During the 2020 to 2021 bull run, ARK Invest's flagship fund, the ARK Innovation ETF, ARKK, returned over 150%. This made ARKK one of the best performing ETFs on the market. However, ARK Invest's performance has declined significantly since the start of 2022. ARKK has lost over 60% of its value since the beginning of the year, and it is now underperforming the S&P 500. There are a number of reasons why ARK Invest has self-destructed during the bull run. One reason is that the firm's investment strategy is very concentrated. ARK Invest invests in a small number of stocks, and many of these stocks are high-growth technology companies. These companies are more volatile than the overall market, and they have been hit hard by the recent sell-off. Another reason for ARK Invest's underperformance is that the firm's investment thesis has been challenged by rising interest rates. ARK Invest believes that disruptive technologies will continue to grow rapidly, even in a rising interest rate environment. However, many investors are now skeptical of this thesis, as rising interest rates make it more expensive for companies to raise capital and grow their businesses. ARK Invest is still a popular investment firm, but its performance has declined significantly in recent months. Investors should be aware of the risks involved in investing in ARK Invest's funds, and they should carefully consider their investment goals before investing. So, what is the current situation? ARK Invest's performance has continued to decline in 2023. As of September 19, 2023, ARKK is down over 70% year to date. This underperformance is due to a number of factors, including rising interest rates, inflation, and a slowdown in economic growth. Despite its recent underperformance, ARK Invest remains a popular investment firm. Cathie Wood, the firm's founder and CEO, is still a well-respected investor, and many believe that the firm's investment thesis will be vindicated over the long term. However, investors should be aware of the risks involved in investing in ARK Invest's funds. The firm's investment strategy is very concentrated, and its funds are more volatile than the overall market. Investors should carefully consider their investment goals before investing in ARK Invest's funds. Hope this video is able to bring you more knowledge on the hidden secret of Wall Street. And I see you in my next video. Take care.